Hey, good morning, everybody. This is Dan with Theta Trend. Today is Thursday, January 23rd, 2014. Today, what I'd like to do is take a quick look at the GDXJ trade that I opened up yesterday. GDXJ is the Market Vectors Junior Gold Miners ETF. So I think it's sort of the small cap gold miners. What we're taking a look at here is a weekly chart of GDXJ. And anybody who follows the miners knows that they've been in basically this huge downtrend. I don't know, I'd say it started somewhere sort of in here back in June of 2011. And, price here went from a high of 179.44 and we're all the way down to a $30 stock now. So the thing has just gotten destroyed, basically. And one of the things I was looking at is I don't like to fight trend, but on the weekly time frame, I've noticed that there's been a little bit of volume pickup in here. I'm starting to see some higher volume. We just got this signal saying that the parabolic SAR was hit, and this 10-week moving average, which is also the 50-day moving average, has sort of started to level out in here a little bit. And that just kind of made me take pause and take a look at it and say, well, maybe I can use this month for a trade. I've been having a really hard time getting filled in the GLD trade I want, so I started looking at something gold related, and this is what I came up with. So at any rate, on the weekly time frame, this basically for me says, okay, it's all right to take some long trades in here, namely to sell puts. The new parabolic SAR level is down here at about 28.82. And this just got hit. The reversal was made this week. You can see as it traded up through that 36.65 level or so. So let's move down to the daily time frame and take a look at it here. So what we see here, this is the yellow line is the 10-day moving average, the green is the 20, the red is the 50, and this is the 200 up here. So the only thing I don't really like here is that the 200-day moving average is still declining. We haven't quite made it up that far yet. In fact, my guess is that we haven't made it to the 200-day moving average in quite some time, and that would be accurate. So what we could be setting up for here is a similar move to what we saw here. So even within a primary downtrend, there still can be some fairly significant rallies, and that's kind of what we saw here. Rallied from 70 up to 90, no, all the way up to 100. That's close to a 50% rally, within a primary downtrend. So let's come back over here. One of the things that I noticed is this is volume on the back of the chart here, and down below I also have volume. And as you can see, the purple line here is the 50-day average volume. And what I started to notice is that there's just this huge pickup in volume in here. And to me, that sort of signals that there may be some sort of accumulation taking place. Oops, I didn't mean to do that. I'll come back in here. And I don't know that for a fact, but that's just sort of what it looks like to me. We're starting to get some higher highs and higher lows on the daily time frame. Things do still look pretty broken in here, but there is a possibility that we're going to see a halting in the decline at any rate, and that's kind of what I'm hoping for at a minimum. So we can even drill down a little bit further, and we'll come in here to the 65-minute time frame. So I use the 65-minute time frame sort of as a timing tool. The yellow line here is the 5-day moving average. And on this time frame, we can see that there is definitely a pattern of higher highs and higher lows. And yesterday we just got this big pullback in here, and so I use that as an opportunity to get a little bit long this market and get a little bit better positioning. So let's hop over and take a look at the put I sold. So the put is a March 2014 31 put. So let's just go back to the chart real fast. We're on the daily time frame here. So the 31 put is somewhere down here. And if you recall, 28.82 was the parabolic SAR stop level, or the initial parabolic SAR stop level. It's going to move forward next week. So going back over to the put, I sold this when price was somewhere here, somewhere around 36.98 or so just under 37. Price closed yesterday at 36.50. The trade is down about $5 as of yesterday. And what I've also done here is I've looked down and I said, okay, if price was to trade down today to 34.5 or so, I would expect this trade to be down about $40. And I sold this for 50 cents. You can see that right here. And you can also see that right over here when I hover up in the chart. And so $40 or so kind of represents 80% of the credit that I'm expecting to receive. And my goal with this is to buy back for a nickel or just let it expire depending on where price is. But if price gets down to that sort of 80% level, what I'm going to be looking to do is to roll this put down, and then that will buy me a little bit more time. I wasn't able to sell, normally I would sell a 10 delta with 90 days to expiration, but as you can see here, I was sort of forced to choose between 57 days and 113 days. And what I kind of looked at is I could sell a 50 delta or a 50 cent option with a 15 delta with 50 days to expiration at 31, or let's go out and look at May. In May, I could sell the same 15 delta for 70 cents, I guess, and that would take me down to 29 or so. And I just sort of wanted the trade to be faster and to get out of the trade. The other thing is, this is a long time to expiration, even for me. I normally like to sell 90-ish days, 90 to 100. 113 is adding, essentially 3 weeks on top of my normal period. So it's a little bit further out than I want to be. And so that's why I chose to move into 58 days. But come back over here. So this is what I've sold, the 31. 28.82 is way down here, and hitting 28.82 is what invalidates this trade. So if price was just to trade all the way down there and I was to sit on this and do nothing, I'd be looking at a loss today of about 285 or so, and you can see that right there on the white line. But long before price gets there, I'd be rolling this down and hopefully not taking that sort of a loss on the position. So that's all I have for today, guys. I hope you enjoyed it. If you have any questions, please shoot me an email to dan@thetatrend.com. Thanks for watching.